Today, Bank of America insiders dumping their stock. Also, are there any more affordable housing areas left for rent and housing? We're going to talk about that. And let's start off with this. My video from yesterday, I went ahead and had to take that down. It's no longer up. At the advice of some of my friends here, I've got a couple influencers, um, people that are influencers here on YouTube, actually, that I keep in communications with. And there's certain things that you're not really supposed to say. Let me put it that way. And that was regarding what happened with the president or the ex-president at the Trump rally. And I had presented some questions, and I'm sure a lot of you have questions. And it's a tragic thing that happened. We never want to see this type of thing happen, regardless of what side of the aisle you're on, the left, the right. What I did talk about yesterday was, though, how divided the country is. And it's not just yesterday. I've been warning about this for a long, long time. And I've been warning that the second half of 2024 is going to be very, very shocking. And I think this is just the tip of the iceberg. I think what we're going to see unfold in the next 6 or so months is going to be very distressing to a lot of people. Some people may even call it a crisis. We've got World War III on the doorstep. I think that's going to be stepping up as far as the type of seriousness that we need to prepare for. But back to the what happened there in Pennsylvania with the shooting. I still have a lot of questions, right? How in this day and age would the Secret Service not see this guy on the roof, right? And that's just one of my questions. And a lot of people criticize me and accuse me of saying the whole thing was a setup. No, I don't think that. I mean, I think they're real bullets. People died, but I'm thinking that you can't always believe exactly what you see, regardless if it's the financial markets, if it's a news story. Always be curious and ask questions and try to look beneath the surface, right? If it weren't for doing that, we wouldn't even know how the economy is really working right now, right? We would just believe all the numbers that are coming out. We would have believed, 3.5 years ago when they said inflation was transitory, right? You can't just believe everything you see or hear, right? And myself included, don't believe me. Research what I'm saying here, right? Sure, I'll give you my opinion. I'll tell you what I think is going to happen, but nobody knows for sure. No one is 100% prepared for the future because no one knows exactly what's going to happen. But I can tell you, second half of the year, have your seatbelts ready because you're going to be very shocked at some things that are going to happen. Now, the question is, when will there be such a big situation come up or story or event that it takes the markets down, right? That's going to be kind of from an investor view. What do we need to look out for? Now, what happened yesterday? What happened Saturday in Pennsylvania with the shooting? Will that shock the markets, right? Or are the markets confident that no matter who's sitting in the Oval Office, that the markets aren't controlled by one person? They aren't controlled by the ex-president. They are controlled by the current president. They're controlled by the banks and the top 10% traders. That's who controls the stock market, folks, like it or not. I mean, that's not me saying that. That's the numbers saying that. I've showed the statistic here many times based on the wealth positioning. And the top 10% right now in this country own about 90% of all the stocks. So when the top 10% want the market to correct, they'll sell their stocks. When they want the market to go up, they'll buy more stocks. And how much money are these top 10 percenters and these corporations and trading firms? How much are they just borrowing? How much leverage do they have in liquidity just being printed, right? We don't know. We don't know if they actually have the money. We don't know if they're borrowing the money. Are they trading on leverage? Just like the banks are lending out money, loaning out money on leverage, right? For example, the banks don't have to have any money. There can be a bank right now with $0, and this is just a analogy. Sorry, I bumped my mic. This is just an analogy. They have to have some money to be able to make deposits and give out money, stuff like that. They have to have some cash. But technically, when you just look at the legal aspect of it here, what's allowed, banks can have zero money, completely empty vaults, and they can still loan out $1 trillion if they want to. There's zero reserves required. I know that sounds crazy. Some people You can't even wrap your head around it, and you may not even believe it. But we've showed it here many times. We've showed you the sources. We went to the Fed's own website, the FDIC. This is for real. This is really the situation right now. Banks can have $0 and loan out $1 trillion if they want with $0. Now, are they going to have $0? Of course not. They need to make transactions, and they need to have something there in case somebody wants to pull some money out of the bank. But if you've noticed and if you've read the stories, it's getting more difficult for people sometimes to take their own money out of the bank. If it's a large amount, they might start questioning you. Why do you need this? And people are like, it's my money. Why are you asking me why I need it? Because banks are afraid of people pulling the money out too much at once, right? You've heard the term bank run, right? Just think about it. Simple. If the banks had all the money that they loaned out, right, they wouldn't worry about a bank run. People could come in and take all the money out. It wouldn't matter because they have a lot more money than that set aside. But when banks don't have the money, of course, they're concerned about bank runs. They're concerned about you taking the money out of the bank. Folks, it's just the complete insanity of the banking system right now. It's even hard to put into words sometimes. That's why you hear me hesitate and kind of look around trying to figure out how to say something because it's just so beyond the twilight zone that sometimes it's even hard to put it into words here for me. All right. Well, let's get into the news here. Obviously, the political divide in this country is at historically bad levels. I don't want to see anyone get hurt. Even people on either side, there's people that will, think the other side's the devil. And I've always said here, I think this is a plan to have everybody pointing the finger at the other side, right? The right is pointing to the people in the left party. The left party, they're pointing to the people in the right party. But they don't look at the entire banking system as a wealth sucking tool that's taking money away from most people and putting it up to the very top, right? And that's what we want to try to expose here and try to wrap our heads around this, and more importantly, try to figure out how to navigate it and possibly even benefit from it, right? Now, there's a lot of YouTubers out there, influencers that only put out videos, honestly, just to make money, right? They're only putting out videos because of the ad revenue. They make money. I know influencers that have to put out 2 videos a day just to keep up with their bills, right? Thankfully, I'm not in that position. Yeah, even though my channel used to be a lot bigger than it is now, um, I'm still, not in a position where I'm desperate or dire. In fact, I don't even have to have this channel. Here's an example here. I've made more money trading stocks last year and so far this year than I made for the entire year on this channel. Now, I also still work. I'm in the labor force still. But my point is, even actually one stock trade, I made more money than I did in an entire year of YouTube, and that was a Carvana trade I did. I can't remember when it was, 6, 8 months ago. Maybe close to a year ago when Carvana dropped to probably over a year now. I'll have to look it up. Doesn't matter. When Carvana dropped to under $5, that was like just that one trade was more than I make on this entire channel for the whole year. So pretty crazy, right? So that's why I love watching the financial markets. It's interesting. It's if you know how things work, if you know the story behind the numbers, then it really helps you like with trading and just understanding everything. When you understand it, it's much more doable as far as getting by and, like I say, navigating this economy, right? Let's go ahead and talk about some things here. Bank of America is out with a warning. I shouldn't say Bank of America. What's happening at Bank of America? Possible bearish signals with Bank of America insiders disposing stock. Look how much more stock Bank of America insiders sold versus how much they bought. I'll bring it up right here. The orange is how much was sold. And I'm trying to read it here. Let me just try to enlarge this here if I can. All right. Anyway, you can see the size comparison from the stocks that were sold. In the orange, the stocks that were bought. That to me looks like a 5, maybe even a 6-to-1 ratio, right? So if bank insiders are selling, shouldn't that be a red flag that something big and drastic maybe on the horizon, maybe even in the next few months? Why would the Fed be talking about rate cuts? The cost of living, price levels have not come down. on average, right? There's a couple areas rents are coming down in certain places, home prices coming down in a couple states, right? Texas and Florida mostly, but overall the cost of living has not come down. And if you look, the average cost of living is up between 25 and 50% just since 2020. And I'm not talking about the CPI number. I'm talking about the actual costs that most people have to pay when you look at car insurance. And I say most people, not everybody. Not everybody drives. Some people live in the city, they take the bus. But in general, on average, costs are up. Car insurance, uh, everything, home repairs are up, materials, food, right? And it's way above and beyond what the CPI number represents. We've uncovered that here many times how the CPI doesn't even include a lot of things that most people have to buy. So, right, most of you, probably not all of you, but most of you understand how that works by now. Let's go ahead and transition a little bit here. As far as affordable places to live, Louisiana named the most affordable state in the U.S. to buy a home. Now, it's not, well, maybe. We're going to talk about that here in a few minutes. There's a difference between cheap housing and the most affordable place to live. There's another study that came out that gives us the most affordable places to live, not just housing, but when you look at wages, rent, and housing, home prices and rents, rather, and other factors that are taken into consideration here. But Louisiana, the cheapest housing, but when it comes to affordable places to live, well, actually, let me go back. Let me correct this. There's two articles I wanted to look at here. Okay. Louisiana, the most affordable state to buy a home. Here is, let's see, we got the top 10 right here. Bring it up here. Now, they don't just look at the home price. They look at the home price along with the median salary, right, and some other factors here. What else are they factoring in here? Percent of houses with a price drop, affordability score, percent of houses sold above list price. So it's kind of a more technical way of looking at it. Louisiana, the cheapest. Texas, number 2, even though Texas has a median home price of $352,000 almost. They're still number 2. Oklahoma, number 3. Mississippi, number 4. Indiana, Missouri, that's 5 and 6. 7, 8, Florida, and Kansas. 9, 10, Iowa, and Michigan. So would you consider a state with a Iowa, $231,000 median home price? Right, think about this. Home prices in Iowa there, that median price of $232,000. You could have bought homes in California just about 12 years ago at that price for $232,000. There were single family homes, like mostly 2 bedrooms, 1 bath. Single family homes here in California were going for $232,000 back then in 2010 is what I'm talking about. So technically 14 years ago. Actually, I know because I bought one, a 3-bedroom, 2-bathroom house for $268,000 in 2010. Right? So California prices have spread to most of the country right now, just 12, 14 years prior. That's what California home prices were going for, right? It's crazy. Let's talk about this here. More talks of rate cuts. And we just talked a minute ago about how price levels have not come down. Inflation is still a challenge. Cost of living a challenge for most people. Most people robbing Peter to pay Paul, barely scraping by, living paycheck to paycheck. In fact, getting further and further into debt as we go along. That's why I've always said there's got to be some sort of breaking point for the consumer here. You can't just keep on going into debt without some repercussions. Wall Street Journal. Milder inflation opens door wider to September rate cut. Does anyone here watching this video today, right now, does anyone here think that we need rate cuts? Now, some people are going to say yes. They're going to say, yeah, rate cuts make things more affordable. That means the financing is going to be less when we buy something. Folks, think about what you're saying. Think about what you're saying. So you're going to be able to buy something at a lower interest rate that you couldn't buy before. What happens when you have millions of people now that are going to be able to go buy more stuff because low interest rates? You think the price of whatever they're buying is going to go up higher? When millions of more people can buy it, is the price going to go higher or is it going to go lower? It's going to go higher. The easier it is to borrow money, the cheaper the interest, the lower the interest rate is, the cheaper the monthly payment, the higher the price is going to go. People are going to bid it up. It's like they bid up home prices when loans were given out to everybody that could breathe. It's going to cause prices to go up, folks. So people think the rate cut's the solution. It's actually going to make things even worse. And inflation hasn't come down. It's slowed down, And I guess if you want to call the last month number the 0.1% drop from month to month, which is still up 3% year over year, if you want to call that coming down, I mean, it's not going to really be even noticeable to most people. Rate cuts, folks, at these current price levels with homes in Iowa, 232,000. Nothing wrong with Iowa, but I'm just saying it's not the the place with a lot of jobs, a lot of farming in Iowa. And I think there should be more farming. I mean, I grew up on a farm in Michigan. I'm not criticizing farm communities or anything like that. A lot of the jobs that aren't farming jobs right now, these office jobs, a lot of these jobs wouldn't even be around if it weren't for the debt that banks loan out, the credit slash debt that's loaned out. In fact, look at some of the commercial real estate buildings right now. Here's one right here. Philadelphia real estate firm faces foreclosure on office tower with 46% occupancy. So most of the offices were empty, more than half. 46% were had 46% occupants. 46% of them had occupants. I get my words out. So yeah, it's continuing. This real estate, this commercial real estate bust is continuing. The banks are already over $500 billion underwater in these commercial real estate loans, and it's continuing. We see more foreclosures every time I look at the news. More foreclosures are happening. Complete towers, entire towers being foreclosed. And think about this: the towers are financed. The businesses that are in the towers, a lot of them are just running off debt. A lot of households are just running off debt. Folks, this whole thing, all the way up to the big office towers, it's funded and operated. It's able to operate by debt, right? And that's why this leveraged banking, this fiat money system where money's just now a digit, it's not anything tangible, and you can click a mouse and create endless amounts of these digits, very, very dangerous, right? And there has to be a correction, there has to be a fallout, and of course the powers that be, they've been doing their best to kick the can down the road, to keep it hidden from everybody. But that's why we're here, so we can know exactly what the true story is behind the numbers. All right, we talked about falling rents here. A lot of Florida and Texas cities, rents are actually dropping. Got a chart here. Let's go over the top 10 cities where rents are falling the fastest, and this is year over year. Sorry about that. I'm distracted by an itch here. Austin, Texas, number one, down over 12%. Jacksonville, Florida, down over 12%. San Diego, down over 11%. San Francisco, down 6%. Tampa, Florida, 6%. Orlando, Florida, almost 5%. Seattle, Washington, 4.6%. Nashville, Tennessee, well, I'm surprised at that, 4.2%. Phoenix, Arizona, 4.1%. Los Angeles, down 3.9%. So these are where rents are falling the fastest. Not the ones that are down the most year over year, but the ones that are falling the fastest, right, based on the most recent numbers. A few surprises in there. I wouldn't have guessed that Nashville, Tennessee would be in there. A lot of people moved to Tennessee from the coastal states. In fact, I lost friends just in the past 2 years. People that I knew that moved out of state. I lost friends to people moving to Minnesota, Tennessee, Texas, and Idaho. And am I missing anybody? Yeah, I can go back further, but just over the past 1 to 2 years, that's the states that we lost, personally lost friends here from California, friends of mine. And I wish them the best, People are moving for reasons, and it's a struggle here in California. Let's talk about Intuit. I think we mentioned this a couple of reports ago. Big layoffs out of Intuit, laying off 10% of their workforce, almost 2,000 people. Well, the CEO first put out the reason why the layoffs were happening, and basically said it's because people weren't performing enough or they're underperformers. But more news came out about this on the reality and the details behind this here. And let me just bring this up here. Right, this was put out here in a social media post by Gergely Rose. I'm probably butchering that name. How Intuit takes care of its people. Its CEO advertises to the world that those they are letting go are not meeting expectations. We talked about that. They're not performing as they should. And you cannot make this up. Taking care of our people. Here was the statement that was put out by the CEO of Intuit. It said the following: We've significantly raised the bar on our expectations of employee performance, resulting in approximately 1,050 employees, and that's just a fraction of them, leaving the company who are not meeting expectations and who we believe would be more successful outside of Intuit, right? So they're really trying to paint the positive picture there, trying to spin something negative into this. This is, I think them trying to be positive. They would be more successful outside of Intuit. So no, we're not laying you off. This is not bad. We're helping you because you're going to be even more successful outside of our company, right? That's one way to spin it there. Pretty interesting. Also, why all of a sudden is it so much more difficult to meet expectations or to have a performance that's good enough to not get laid off, right? It's because of AI. They're replacing a lot of jobs with AI. So now people are competing with artificial intelligence. So it's going to be more difficult to meet expectations or to perform satisfactorily enough to keep your job. Intuit ramps up AI efforts as it's beginning to face increased competition as the company is focusing more on investing in its AI powered technology, such as Intuit Assist, which is implemented on its TurboTax product to help customers file taxes. So now, if you ever try to work with software and you need help, you click a chat button or a chat bubble or window. Sometimes it'll be a real person, but more often than not, way more often than not now, it's just a algorithmic messaging tool or AI that's going to try to help you, right? So they're trying to phase people out. That's why it's so dangerous. What's happening right now with the levels of debt people are getting into? People are borrowing money based on what they're making at their job today, when companies across the board are doing everything they can to get rid of you and eliminate your job. Does that make you feel good? I think it's very concerning, folks. So, all this, let me know what you think about all this here. We talked about the rents, the more affordable cities, the political divide, the black swan. Really bad things going to be happening this year that I think you better be careful with having a lot of money in the markets. We know it's controlled by the top 10%, but when they all decide to hit the sell button, folks, market corrections can happen, flash crashes can happen. We've seen drops of 5-10% in one day in some stocks and even the major indices during the past 5-10 years. These things have happened. So we know that it's just propped up by a few clicks of a button, folks. So that's what I'm saying. Be cautious. Be on top of what's happening. What do you think about today's report? Please let me know down in comments. Until next time, keep stacking big love. Bye for now. Peace.